Hey folks, it's Simon here with your Tao Daily for September the 19th, 2024. So Powell delivered a 50 basis point rate cut yesterday. That was more or less what the markets were looking for. It was more than what Wall Street economists were looking for. Market reaction, though, was pretty meh. We did get a rally, a bit of a rally, almost 1% higher immediately post the FOMC decision. But all of those gains were given back and then some, and the S&P ended up closing it slightly in the red, down 0.3%. In what looks like a classic case of buy the rumor, sell the fact. Now, the S&P is at a fairly pivotal level here. I probably don't need to point this out to you, but we're at either a triple top, which means it's unlikely to resolve by just trading sideways. Okay, this is probably a fairly binary set of outcomes here. Either we break higher, and I've got 580 as an upside target, or we break lower. And if we break lower, look, a retest of the August lows, I think, is on the cards. There wasn't really much of a theme in yesterday's market action. Tech was the weakest sector, but utilities was the second weakest. All right, so tech is kind of the most growthy sector in the market. Utilities is one of the more defensive sectors. So clearly not much of a theme in yesterday's market action. Potential warning here is just the weakness we continue to see in semiconductors. They're still respecting this downtrend, still below the 50-day moving average. That's important because semiconductors tend to lead the NASDAQ, and the NASDAQ tends to lead the S&P. Although more recently, I'll be the first to admit that we're seeing a divergence between the NASDAQ and the S&P. We've seen, obviously, money come out of the Mag 7 and the AI-related stocks, and sectors like utilities and healthcare and consumer staples and financials have performed really, really well. And that's helped boost the S&P, and it's even helped lift the Dow Jones to new all-time highs as well. Whether the Fed is setting some kind of a precedent, cutting rates by 50 basis points when the S&P is at all-time highs and the unemployment rate is only at 4.2% is a question worth posing. But it's not an easy situation. As I said yesterday, looking at US two-year yields, the Fed really does appear to be behind the curve here, because that spread between two-year yields and the Fed funds rate has really opened up. As I shared in yesterday's video, this degree of divergence has preceded some pretty major market sell-offs in the past. Now, the NASDAQ and S&P futures are trading strongly in overnight markets. Let's see if they can hang on to their gains during regular market hours. I really think today's price action is going to be quite crucial, given at the very pivotal level the S&P is currently trading at. That's what I got for you today. I hope it helps, and I will catch you tomorrow. Thank you.